Okay, hello everybody. Welcome to Korean Atlanta Mentorship, and we're going to do another Velocity Banking review. It is Thanksgiving tomorrow, so we're just going to do the same thing that we do every single night or every single time we have some free time to create some Velocity Banking videos. And I've been watching your comments. Y'all have been telling me I'm the best, right? This guy is the best. Okay, and maybe I gotta push that and be a little bit more narcissistic and self-promoting because you know I appreciate you all. Giving me the praise and compliments, and I'm kind of like the evil queen, except that I'm not so evil. Where I tell mirror, mirror on the wall, please tell me who's the most beautifulest velocity banker of all. Oh, it's me. I'm just kidding. Let's go ahead and get started. Velocity banking. What is it? It's a debt payoff strategy where you throw all your money into debt. So, if you take a look right here, you have income like this, and then you have expenses like this, and you have $1 left over in your checking and savings because you have a lot of debt, right? 10 credit cards and a mortgage, and then your personal expenses is 2,500 a month. We're assuming in this case we don't have a student loan. Maybe we paid it off. Remember, maybe we never even had one. Maybe we listened to Dave Ramsey once upon a time, and then later on, kind of said "F it, YOLO," and we just kind of decide to go a little bit crazy with credit cards. But is this the end of the world? You know, when most people look at this, right, they're thinking, man, I got to declare bankruptcy. That's what they're thinking, bankruptcy. Okay. Now, most people, it's my suspicion, if most people understood how velocity banking is done and they felt comfortable with it, there'd be a lot less broke people, right? And if you want to know how the banks work, you become a target not when you're poor, it's when you're rich and you don't have that much debt, okay? And a lot of people don't know this, but the bank is kind of like a vampire, right? Who does a vampire want to suck the blood of? Someone who has no blood or lots and lots of blood, and no other vampire has sucked their blood, right? That's who a bank wants to target. Have you ever noticed when you pay off debt, you start getting all these debt offers in the mail? It's like, wait a minute, I'm debt free, and then they just keep sending, credit card offers, loan offers. They just keep sending it to you, and once you get hooked on debt, even though you have income, they want to make sure that you feel like you're drowning, but not to the point where you actually drown. So I don't know if that's actually waterboarding or not, but they want to make you feel like you're drowning in debt, but they don't want to make you drown because you actually drowning means that the lenders don't get paid, if that makes sense. All right. So how do we do velocity banking? Well, first step is the budget. We have our income, expenses, leftover checking, savings. And then we have our expense breakdown of all the debts that we have, and it's very important to list every single debt as a line item. And then here you can just combine your other expenses, food, gas, insurance, so anything that's not debt, but you always have to pay for. You just kind of put a general number here, 2,500. It'll depend on your budget, right? And what we do with velocity banking is that we create the same budget, right? So we have to make sure this first column as the average American is accurate, but we're not going to save money. Whoa, crazy, right? So if you take a look right here, money comes in and then it just goes right out. That's what essentially happens. Money comes in and it just goes right out and then you're good. So, yeah. And what we're also going to do is focus on this number called cash flow, which is different from checking and savings, right? So checking and savings would be zero, and this cash flow number can be greatly increased if we just shuffle some debt and we have something called a line of credit. So what's a line of credit? Well, it's basically a financial tool where you could borrow money, pay it back, and then use it over and over again. So this is my $373,500 home equity line of credit. $373,500 home equity line of credit, which means all I got to do is go to the bank's website, click a button, and then they'll dump up to that available limit in my checking account instantaneously. I never knew these products existed until I learned velocity banking. And by the way, if you don't know who I am, I actually have over $739,000 in lines of credit and credit cards, right? If you didn't know, a credit card is technically a line of credit because you can swipe, pay it back, and use it over and over again. 739,000. And I'm going to tell you the secret of how to get all these lines of credit, which is banks don't lend money to people who need it, right? So that's why I talked about when you've paid off debt, you don't need money. And the bank knows that. They have all these sources of data they harvest your data, or the creditors do, to figure out who's the best candidate to take on a loan. And the best candidate to take on a loan or a credit card is someone who doesn't need money because the lender knows that they'll be paid back, right? It's a risk averse move. Okay. Now, if you're here and you only have $1 left over, you're probably not getting any more debt offers, right? Bank sees you're drowning. Yeah, they don't want you to drown. They just want to make you feel like you're drowning. But we're going to make an assumption here that we have a free and clear $200,000 line of credit. Now, why do we assume free and clear? Because it makes demonstration easy. It's like saying, hey, if you crashed your car without auto insurance, and then there was a car insurance company that gave you car insurance, would be a lifesaver, wouldn't it? But it's probably not going to happen. And if you want to see a more realistic scenario, join the YouTube channel membership. It's only 99 cents, where the YouTube live stream is actually called, members only live stream is called like 22 debts and only $4 left over. This is one of the craziest things that I ever did. And I actually didn't come up with it. It's a real life case scenario that somebody emailed me. And I remember when I saw that for the first time, I was like so mind blown. I was like, I can't believe this, right? I cannot believe this. Anyways, all right, so let's go ahead and this is what we're gonna do. So if you don't know what the cash flow index is, all it is a formula of the balance of the debt divided by the payment, right? And so what you do is you just kind of do this with all your debts, and then this is a debt ranking order system. And the lower the number, that's the ones you want to pay off, and the higher the number, that's when you don't want to pay off, right? Why? Because you get less bang for your buck for paying off this high number. So example, in order for me to get $800 of cash flow back in my life, I need to pay off this $200,000 mortgage. Well, that's crazy, right? Because if I just pay off this 35 grand credit card, I'll get more cash flow than paying off the mortgage. Okay, so this is what we're going to do is we're going to take all of these credit cards, 5, 8, 15, 27, 37, 10, 35, 12, 15, and then it's going to be $164,000, okay, and we're going to move it into the line of credit. Okay, and then guess what happens when we just simply do a balance transfer? Guess what happens? Oh my goodness. Oh my goodness. We literally went from $1 to 5,1111 or 1,000. I can't even speak properly. $5,111.83 of cash flow, right? And then what we're going to do is the final step, which is $8,000 into the line. Take $3,000 of expenses out and then rinse and repeat over and over again. So this is what we call making the line of credit as our main operating account. So the real difference here and here is that with average American banking, okay, what we're trained to assume that the checking or savings is the final destination of our money, right? Whereas the velocity banking, the checking and savings is essentially the middleman of our money. And by the way, if you don't know who I am, I paid off a mortgage in 2 years and 9 months. Okay, proof of that right here. So that's really the only difference. So here, the final destination of your money is the line of credit. So $8,000 goes in, satisfies the minimum monthly payment. You take the $3,000 out, and then you rinse and repeat over and over again. And let me just kind of do this right here. G2 plus H2 minus 5101.83. And then what we're going to do is take the average daily balance, multiply it by the interest rate, and then you divide by 12, right? And then we're going to go ahead and copy and paste, and then we see that after every single month, look at that, the balance of that is it's amazing. It's like an infomercial, you know? You ever watch those infomercials where it's like cleaning products and or like, set it and forget it. I can't believe it. Look how OxyClean like cleans the grime away from all of your, furniture or carpets. It's the same thing. Look at where'd all the debt go? Oh my goodness. We're freaking out $164,000 of debt thinking about declaring bankruptcy, and now we got this huge cash flow number. And so now let me just go ahead and do this. So we're at month, what month are we at? Month 37, so 37 months. Okay, 37 months. And then this is going to be 164K, right? And then now we have to pay off our 30-year mortgage. So at 37 months, what's the value, what's the balance of our 30-year mortgage? And actually, let me just kind of use our loan calculator. This is an old loan that or a couple of loans that I did in a previous demonstration. But right now we only have the mortgage here. So at 37 months, we just got to type in the current month. The balance of the mortgage is $186,000. Now there's two ways we could pay off the mortgage, right? Obvious one is just doing extra payments, which if you want to do that, that's really easy, go for it, right? And you don't want to use a line of credit anymore. You can still use a line of credit, and I'll tell you why I like using lines of credit, okay? It allows me just to constantly overpay and not think about it. I know it sounds kind of weird, right? But if I dump this entire extra savings into the mortgage, of course you're going to pay it off early. But the reason I don't really like that is because it's going to allow me, and I haven't really talked about this in a while, it's going to allow me to segregate my income, or there's a bigger probability of that happening. If you don't know what that means, basically your income goes into your checking account, it gets split all over the place. And so I kind of think of it as like a safety belt, because my goal is to make sure that all of my money just goes into one place, so that it's constantly attacking debt. Hopefully that makes sense. Now, I know there's an objection. Well, you're using an 8% line to attack a 3% debt. And that's totally valid, right? Because the thing you have to be careful about when it comes to paying a loan off with the line of credit, okay? And actually, let me redo this part right now. The thing you have to be careful about is that you don't move the whole loan into the line of credit when you're dealing with a 30-year mortgage, especially a 30-year mortgage, okay? A 30-year mortgage that, let me just kind of go here, that has a very low interest rate. I think that's one of the biggest mistakes that you can make. 712.83, and I'll show you why. Because if you do that, you'll probably end up paying more than using a 30% credit card. 843.21. And then what's the line of credit interest rate? It is 3%. No, it is 8%. What's our monthly income? Let's take a look here. 8455.04, 8455.04. And then what's the expenses? It's everything except for the loan we're trying to pay off, so $2,500 right here. And then I'm just going to show you, let's do 9,000. You see that this gets paid off in 2.8 years if we quote chunk. What does that mean? Just move a piece of the loan into the line of credit. I will say this. It really doesn't matter if you pay the loan off with extra payment or a line of credit, right? I just want to show you that even if you use a 30% credit card, you'll be fine. Like 2.8 years, yeah, you'll end up paying, let's say, 4 or 5 grand more. In fact, I would even argue that if you're doing this, you probably get enough rewards points to probably go back to whatever it was, right? If you're using a 30% credit card, you have that 1 month floating period, so you might even not pay interest. Actually, that's actually why I might use a credit card. You use Plastique and then maybe pay a 2.9% fee. So if you can make it up in interest savings and credit card rewards points, it might be worth it. But hey, heck, assuming you don't even have that, look at this. Now let me just kind of show you here, 8%, and we do a whole replacement of that loan. Look at this. This takes the longest. I mean, 3 years. It's an instant. And this is 23 grand, but why pay that, right? All right, so 2.8 years. And then, so that's 37 divided by 12 plus 2.8, and then that's 5.88 years. And then we are debt free. See how easy that was? Share this with all of your friends and family in Turkey Day, Thanksgiving, right? Because none of you have to be struggling. And, if you want to be generous in Christmas, pay off all your debt. And then you can easily be generous in Christmas, and, you don't have to be skimping on funds, right? Or skipping on Christmas gifts if you're debt free. And you've got plenty of money coming in. Okay. Well, that's it for today, folks. This is Korean Lancet Mentorship. Tomorrow's Thanksgiving 2025. Happy Thanksgiving. I'll see you all in the next video. And you know what? I might be a little bit generous, right? Normally I don't do free Zoom calls, but I might just do one just to hang out. Or maybe we could talk about velocity banking, but I don't really care because I like hanging out. And I might just call it like office hours. Like I'll just put like a random Zoom link in like the YouTube community, and then it'll be like at 3 a.m. or something. I don't know if I'll do it at 3 a.m., but it'll be like, yeah, just hang out with me, and then I'll be like begging for super chats or something. No, I'm just kidding. Maybe I should do that. Isn't that what YouTubers do? Like you do live streams and then you beg. No, I don't know if beg is the right word, but you want super chats to come in. All right. Well, have a great day, everybody. I'll see you on the next video.